Welcome to the Sanity Project podcast, where you can awaken your mind to clarity and success even in today's life challenges. We're here to provide insights and solutions that will help you live a sane, healthy, and prosperous life. Here's your host, Joanne Victoria.
Hello, everybody. This is Joanne Victoria with another amazing episode of the Sanity Project podcast. You are here to discover a life of clarity, confidence, sanity, and entrepreneurial success. And our guest today is Maryann Keith. Maryann Keith is a financial advisor working with single, divorced, and widowed women, specializing in holistic financial planning. With extensive expertise in Social Security and Medicare pertaining to financial planning, she has many secrets to share on these topics. So let's talk about you first. How did you get here?
Well, first of all, thanks for having me today, Joanne. I'm looking forward to our conversation.
I'm grateful that you are here because you have a topic that I'm sure women would love to hear about.
Yes, I'm excited to talk about it. But first, my path as to how I got involved in the business it's a bit of an unusual one. My educational background is actually in music. I have 2 degrees in music performance, specializing in playing the flute. And it was a really great educational background for me just because musicians are required to be so detail oriented, and musicians typically have a strength in math. And after I was done with my schooling and tried my hand at freelancing and auditioning for major orchestras, I wasn't finding the kind of work that I wanted that was satisfying and fulfilling to me. So I tried looking for part-time jobs to supplement my freelancing that could potentially be a career path down the road. And I started working for a financial planner about 17 years ago and really fell in love with the field, really enjoyed that I could do some work that had a meaningful impact on people every day. And I just dove in head first and became a student of the business and have been learning on the job. I have a fantastic mentor that I have the pleasure of working for, and the rest is history.
That sounds like an exciting journey. I mean, to go from music to helping people with their Social Security and Medicare.
Yeah, it's been an exciting journey. Also, at times, a scary one. Anytime you make a life change, it's scary. And, having that life experience back in my 20s of making a career change, I feel like has made me a better advisor because I'm able to, hold my clients' hands when they go through life changes, whether it be career or loss of a spouse or any type of change.
And here you are.
Here I am.
Here you are. So tell us what is new and current with Social Security today?
So a lot of your listeners have probably been hearing in the news that we're on target for potentially a huge cost of living increase in January. I'm seeing numbers as high as 9.5%. So that's something that could really help those who are already drawing their Social Security. That could help them fight against inflation a little bit. And Joanne, there's always the, elephant in the room that everyone asks me about is Social Security going to run out of money? And that's a very valid concern. And what I tell people is, it doesn't matter your politics. If that day comes and the fund is out of money, our politicians are always interested in getting reelected. So I strongly feel that they will come up with a plan. It will probably be at the 11th hour. And it's probably going to involve paying more in taxes. Who is going to pay those taxes remains to be seen. But, I do think that our politicians will take action at some point because they want to save their seats in Congress.
That's the truth.
Mm-hmm.
And I know that the increase, the foreseeable increase is like, as you say, mid 9%, but that's just going to catch them up because they haven't had cost of living every year.
Mm-hmm. Yeah, there was a decent cost of living last year, but that was the first year in a while where it was a really big, meaningful bump.
Yeah, and with the numbers now that you can't, what am I trying to say here? You can't capture all of it or recapture all of it. So you're going to give them a huge bump one time, and then the politicians will go back to the table and fight their way to get it again. So how can you, when you say here, when you're making a decision about when to take Social Security isn't as straightforward as one would think, how do you go about getting as much as possible?
So a lot of it involves doing a deep dive. I know I tell people that I'm an expert in Social Security and Medicare, but I have to be an expert in a lot of other things so that I'm able to just get a holistic view of a person or a couple's financial picture before I make a recommendation. So we have to look at things like, family lifespan history. How long do you think you're going to live? How long do you think you're going to work? Because there's something that a lot of people don't know. A lot of people are eager to start drawing their Social Security at age 62. But if you're still working, you actually are subject to what's called the earnings test. And that is where the Social Security Administration reviews your tax return. They see that you're still working, but you're taking your Social Security benefit, and they actually will deduct money from your Social Security paycheck. So if your income is over $19,560, they start by taking one of every $2 of your benefit.
Wow.
Yeah, so that's something a lot of people don't think about. They don't factor in.
And how long does that go on for? Until they reach 70 or?
That goes on until your full retirement age. And that's one of those things that turns into an acronym. You'll see FRA, so that's full retirement age. And if you were born 1960 or later, your full retirement age is 67. If you were born before that, you would just go on the Social Security website and look at the table. It would be, 67 and X number of months based on your birthday.
Okay, so in 1960, that would be January 1960, or is it another?
Yes, yeah. January 1960. So that means with this earnings test that I'm telling your listeners about is if you were still working beyond age 67, at that point, Social Security can no longer effectively garnish your check. So we see people working later and later. One, just, sometimes for the love of it. Two, sometimes they're doing sort of their part-time passion project. So we see a lot of people waiting till 67 or later on their Social Security because they don't want to lose any of their Social Security paycheck to the earnings test.
And what about, how does Medicare enter into this?
Yeah, so Medicare is another interesting thing where you've got to take sort of a holistic view. So Medicare, for those who don't know who are listening, kicks in at age 65. And, there's part of your Medicare that you've prepaid all of your working years. That's Medicare Part A, and that covers your hospital care. And when you're age 65, you also need to sign up for Part B, unless you're still working. If you're still working, you may be able to continue on your employer plan, but they may also request that you go on Medicare Part B. But your Part B premium is something that you pay out of pocket for, and that premium is determined on your modified adjusted gross income. So that's something where, when I'm doing planning for clients, when I'm doing income planning, I'll get with them and I'll get with their accountant. Part of the equation with the Social Security is, if we take the Social Security, is this going to increase their income such that they might be subject to higher Part B premium. So there are all of these moving pieces. And, when I know that I need to call in for help, to that CPA, for example, we dig into the numbers and try to come up with the best possible solution.
Okay. So on average, I guess you would say that from January 1960, if you were born in that year, you don't have to worry about anything.
Oh, you have to. There's plenty to worry about.
Oh, no, no.
I hate to be the bearer of bad news, but if you were born January 1960 or later, what that means is if your full retirement age is 67. So what we're focused on is not necessarily when you were born, but what your full retirement age is. So that's something that, I want all your listeners to go look up when they're done. If you were born before 1960, go check it out, see what your full retirement age is. And then when you know what your full retirement age is, that's the age at which you do not have to worry any longer about any earned income you have, potentially decreasing your Social Security benefit.
Well, thank goodness that they would know that now.
That's right. They can plan ahead.
So what do you tell someone who's counting on that and not counting on one of every $2 going into, if they're 62 and over and they want to change and get their Social Security now and they want to still work either full-time or part-time, one of every $2, 50% of their income up to what?
Up to, up to $51,960. So they start the one of every $2 at $19,560. And then once you reach $51,960, they deduct one of every $3.
Oh my. You need a calculator.
You do. Or a financial advisor.
Or a financial advisor by the name of Maryann Keith, who can be found at Beden, BEDEN Wealth, WALTH.com. So let's see. What else do I want to know?
I want to go back to your question about what do you do if you want to start taking your Social Security and it's not enough to cover your expenses, which for most people, it is not enough to cut it anymore and cover your expenses. So we look at, can we keep your part-time income under the cap? Do you have other assets to live on? Just for example, if somebody saved money in, their retirement accounts that, withdrawing from an IRA, individual retirement account, or a 401k, that would not count towards the earnings test. So we look at what you do have and try to get to a plan that would allow you to, potentially retire early. That's typically, Joanne, when people want to take it early, is if they're looking to retire or go semi-retired.
Okay, this is getting way too complicated for me. And I strongly suggest every person, certainly every woman that is listening to this show, contact Maryann Keith at BedenWealth.com or Mr. Keith. That seems the way you have your email address. Is that what it's supposed to be?
Yes, it's got my middle initial in there.
But it's intriguing the way it's Mr. Keith, because
I know. Yeah.
Okay, so it's Mr. Keith at BedenWealth.com. So what else can you tell our listeners?
Sure. So one thing I wanted to talk about is for any listeners out there who are widowed or know someone who is widowed. So, a standard person is not eligible for Social Security benefits until age 62. But if you lost your spouse, you are eligible for what is called a survivor benefit as early as age 60. And, sadly, a lot of my clients were widowed at a young age. Mm-hmm. And one thing that I've had to discuss with some clients who have lost their spouse at a young age is remarriage. Oh. And typically you would think of marriage as just purely a matter of the heart, but it's also a matter of finances, because if you are a surviving spouse and you remarry before you turn age 60, you actually, in most instances, forfeit your right to a survivor benefit off of your deceased spouse's Social Security record.
Oh.
So we've actually had to counsel clients to, delay walking down the aisle until they turn 60, just so that they have that option.
So now there was something that I heard a long time ago. If, let's see, if you were divorced and you went and checked your divorced spouse, whoever, male or female, what they were getting, if they were getting more than you were getting in Social Security, you could get their Social Security. Does that make any sense to you?
Yes. So that's another great thing, Joanne, that you've brought up to your listeners. If there's anyone out there listening that is divorced,
well, I'm sure they're at least 50%,
I'm sure they're
right?
I know, at least 50%. So if you're out there, you're divorced and you're age 62 and your marriage lasted for at least 10 years and you have not remarried, then you can call up the Social Security office and see if your ex-spouse's benefit, if they're drawing their benefit, if it's larger than yours, and you could potentially get more than you expected. And one tip for everyone, I know we're in this technology-driven world where so much information is available on the internet, but the only information you can get on the Social Security website is information off of your record for your working years. So if you're divorced or if you're a surviving spouse, you do have to call the Social Security office or go in for an appointment to get information on the amounts that you're eligible to receive based off of an ex-spouse or a deceased spouse's record.
So if you were married at least 10 years, now I know why Tom Cruise had that.
And that's another thing, another difficult thing we counsel clients on sometimes. If you're thinking about getting divorced, do you feel safe enough in your marriage that you could hang on to get across that 10-year mark?
Mm-hmm.
If the person you're divorcing made significantly more money than you, it's something that could be worthwhile from a financial standpoint to just hold on for one more day.
That's a terrible thing to deal with because, after all that's going on, and then you have to make sure that you're not divorced before 10 years is up.
Yeah, it's tricky and very, very difficult.
Yeah. All right. So we've got the 10-year limit, and please pay attention to that, women. The divorce issue, and if they've been married less than 10 years, they're not going to get anything extra from the ex-spouse's benefit. But if they're married at least 10 years, they would get some reward, I guess.
Well, if their ex made more money than them, if their ex was a higher earner, that's a scenario where you could potentially get more.
And then, so that means that the ex continues to get their Social Security. Let's say that they're on Social Security as well. Everybody's up in their years. And then the spouse will also get extra benefits from that?
Yes, that's correct. And it doesn't affect, so let's say the higher earner, they're not going to subtract anything from that higher earner's Social Security. So, effectively nobody's getting penalized in that scenario.
Why do they do that?
I don't know. Perhaps it was to keep Social Security out of divorce settlements, because I think that would be too much for the system. If the system had to process and review everyone's divorce decree, my goodness, that No one would ever get their benefits.
Well, there are, as I brought up Tom Cruise, he did have one with his ex-wife, one of his ex-wives, that if there were a divorce before 10 years is up, the 10-year marriage, she would get less.
And maybe she had an advisor on the side advising her on her prenup that, that 10-year mark was a really good one to target, because so much changes with the Social Security at the 10-year mark. Though for a celebrity, I'm guessing the Social Security benefits are de minimis compared to, a divorce settlement from Tom Cruise.
Right. So how can people find you?
So you can find me at our website, www.beatonwealth.com, or you could look me up on LinkedIn and shoot me a message.
Okay, so we've covered 62 and older to take Social Security, that you might have to, if you want to work, you're going to give up some of your income, one of every $2. I mean, that's 50%.
Yeah. And one thing I also want to add is if you wait until 67 or the full retirement age, you end up getting a higher benefit. So the difference between full retirement age and age 62, it's actually a 30% reduction on your benefit if you take your benefits at age 62. So there is an increase for waiting in your benefit. And that's something that's displayed on your Social Security statement if you download it. And if you wait even longer, so the longest you can wait is age 70, the difference between age 67 and age 70 is a 24% increase.
Okay, so that means after 70, there are no surprises left.
Correct. No more increases and no potential for decreases either.
So if someone wanted to check their Social Security today, where would they go?
They would go to ssa.gov and they would download their statement. And the statements have gotten a facelift over the past few years. And the great thing about it is it's going to show you in plain dollars. So you don't have to get out your calculator and calculate all these percentages I've been telling you. It'll show you in plain dollars what you would receive at all of the different ages. It will tell you what your full retirement age is, and it has, a variety of other good information on the statement.
So that's ssa.gov.
That's right.
Okay. Well, I think you've mentioned every possible scenario. And if people want to talk to you personally, you can go to her LinkedIn page, which is Maryann Keith, CFP, CIMA. What does that mean?
So those are my designations. CFP, which a lot of people are probably familiar with, Certified Financial Planner. And then CIMA is CIMA, or Certified Investment Management Analyst, which means I've just undergone extensive training in investment management and investment manager selection.
And you have, haven't you? So do you help these women with other investments?
I do. So my favorite way to work with clients, because I feel that it's the most effective way, is to do a comprehensive financial plan where we touch on everything. We touch on the Social Security, the Medicare. We look at investment planning, insurance planning, estate planning, tax planning. We look at everything just to try to come up with a harmonious and holistically sensible plan. And from there, if the woman chooses, then we will implement and work together on investments and, any other types of services that they would like help with.
Well, I want my women listeners especially to call Maryann Keith or find her on LinkedIn at the Maryann Keith CFP CIMA, but it'll show up. And talk to her, get some advice on what to do, I want to thank you, Maryann, for being here today, because this has been a great insight for me, as well as our listeners.
Thank you so much for having me. It's been a pleasure.
Well, I like when someone such as yourself, you have a job, you're an executive at an investment firm, and yet you've taken this little niche. It's not a little niche, it's a big niche, and come forward to help with women with their holistic financial planning.
It's a great niche, and I love it. I love the service I'm able to provide for my clients and to help make their lives better, and to, in a certain way, remove some stress from their day to day.
That's it. You're removing stress. Thank you very much, Maryann Keith, for being here today. It's been a pleasure.
Thank you, Joanne.
I hope you enjoyed this episode of the Sanity Project podcast. Please go to AskJoanneVictoria.com to listen to more podcasts. Check out Joanne's coaching programs and get a free copy of her report, 5 Steps to Achieve Life-Work Harmony. That's AskJoanneVictoria.com. Take care, and thanks for being here.